Hello, everyone. Happy Monday. Happy Veterans Day. Thank you to all the veterans who served. We really appreciate you. Again, it's stocks are closed today. I just want to pop on here real quick and cover a couple things. Uh, Especially take a look at some of these longer term valuations because the market just keeps climbing, which is fine. Short term trend is still up. No, we're getting into very, again, potentially topping signals, but nothing's triggered yet. So, can it keep climbing? Sure. But it's good to know your reward to risk. What you're taking on is a lot of potential risk for what could be some limited upside reward. Good morning, Jacob. Good morning, Heinrich. Good morning, Ted. Thank you, Ted. Help Mike hit the like. Good morning, Anissa. Good morning, Daniel. Again, it's going to be a lighter group this morning. Just an update: Sterling is still improving. Was in a lot of pain on Saturday, recovering from surgery, but making progress yesterday. So again, keep any thoughts and prayers with Sterling as he continues to recover. Good morning, Royal Palms. Good morning. Thank you, everyone, for tuning in. Again, this isn't going to be terribly long. Can we check out? It's my day off, Royal. We can take a look at it. Again, there's nothing today. So I'm fighting off being sick too. My wife's been sick for the last 10 days, really sick. And I was hanging in there, but this weekend it finally started hitting me. So not as bad as her, but oof. And I got to take her to the airport in a bit too. So she's got to fly and she's still sick. Gotta fly. So that's a little, but we're just going to keep plowing through it. Tomorrow, we got a lot of Fed speak. A lot of Fed speak tomorrow. And then Wednesday, we have the CPI numbers and Fed speak. Thursday, we have the PPI numbers. Jobless claims is always on a Thursday. And because of the holiday today, the EIA crude numbers and more Fed speak, especially Powell is speaking. Powell is speaking at the end of the trading session, towards the end of this trading session. And Friday, we have retail sales. So, lots going on this week, starting especially picking up Wednesday, but Fed speak all week. Hello, Charles. Again, this is still from Friday. That's your heat map from Friday. Stocks are not open today. You have some behind the scenes trading, but these exchanges are not open. In terms of the Fed, remember we got our rate cut 25 bips last week, and it's still expected at close to 70% for another cut in December. Fear and greed is still solidly in greed mode after dropping to fear for like a day and then popping all the way back to greed. I want to look at these. So our Schiller PE, look at where we are, 38.25. The last key peak in October 21 was 38.58. The all-time high in 99 was 44. The peak from, again, this can keep going. Can we keep climbing? Yeah, the peak from 29 was 31.50. Look at your mean and median, 17.16. We're nowhere near this. Stocks are through the roof expensive. If we look at the price to sales ratio, and this is their chart going all the way back to December of 2000. But look where we are, price to sales. In terms of the last since 2000, we're the highest ever. We've even exceeded our peak in December 2021 when money was just sloshing around. We're a higher price to sales. And where's our price to book? Price to book. Look at this. We're even up. Here's your December. Your March. That was actually the highest, March 2000, right at the where the .com peaked out. 506. We're at 527. So yes, can we keep going? But keep this in mind because valuations don't matter to a lot of people until they do. So that's what I'm saying. Just know where your key levels are, especially if we make some more significant tops. Until then, the trend is still up. Good morning, Eric. Thank you for tuning in. I just wanted to point out some of those valuations. We don't cover them on a regular basis besides me popping up the Schiller PE ratio. But the market is very complacent and very expensive. And in terms of things in the short time, the Trump trade will still win out in the short time. What can trigger that? The rollover? I don't know. Maybe it'll continue through. We get some preliminary holiday sales and data coming out. If that starts disappointing, credit card debt continues to climb. We do have earnings today, but nothing that's really gonna move anything. Tomorrow, keep an eye pre-market at Home Depot. That's the biggie tomorrow morning. After the close, we got stuff like Spotify, but again, nothing market moving. Wednesday, before nothing really. After, we got Cisco, we got Beazer Homes, but Cisco's gonna be the biggie. Thursday, we got Walt Disney before the open. Advanced Auto Parts, one of my favorites, always. That'll be interesting to see because a lot of your do-it-yourselfers and a lot of people who have to resort their cars breaking down. I gotta fix it myself. It's gonna be interesting to see what their numbers and their conference call releases. After close Thursday, Applied Materials, and then Friday, Alibaba. So that's what we got ahead. Now, just a quick overview. We've been continuing to climb. I mean, look at this. Look at this since the election. Just vertical up. Closing in, we're right around the 60s. The next harmonic was 60-60. Really pay attention. Really start paying attention, though, to last night's overnight low area. So your overnight low, and this is especially going into tomorrow, and about this 60-29, 60-30 area. 60-30 is going to be really key, what I'm going to be watching for if we start rolling over. We're getting very overextended from the rotation zone. We're getting, again, we went into the rotation zone, but each time we're pushing, we're still diverging. We're getting stair-stepping divergence. Can this keep climbing higher? Yeah. All right, but we are doing it with waning momentum. I don't know what's going to tip the rollover trade. Don't know what it's going to be. It could be something out of nowhere, but just pay attention. Pay attention to that. And based off of here, really, an ordinary pullback could happen to even this 5,500 level without doing major technical damage. Minor technical damage, yes, but you could pull back easily still at some point to 5,500, which is right between the 50 and 62.5. And yeah, it would freak a lot of people out, but geez, that would just be back where it was trading September, August, and in June. Until that 60-60 and then 60-85 are the next two minor levels higher. NASDAQ, again, we went to all-time highs. This is not a race to potential double. Not erased it yet. But in the NASDAQ, you could easily pull back to this 19,000 level. Still, next target's upper 21,450 and then about 21,900. Those are your next key levels should it continue to climb. The other thing to watch for, based off of the overnights, especially with today being holiday, is about 21,250 going with tomorrow. If we start rolling over. The Dow, we had 44.2. That was taken out and closed just below on Friday, and now moving back up. Next level, next major level was into 44,850 area. We don't need to go through it overnight, so you can look at that yourself. We had on the Russell a little mini potential double, which never triggered, and the Russell, which is also getting super expensive for small caps, but closing in on 2450, which was the next real harmonic area. Above that is 2480. What else do we have? We have the DAX. The DAX, it looks like it's going to finally close back. Look at this volatility, price action, but going to look like it's going to close above the 62.5. So the magnet price in the DAX is 19,713. If it does break to new highs, 19,892 and 19,981 for those DAX traders. Notes. I'm going to show the yield here. we have a potential little mini head and shoulders top. Yields climbing back up to about 4.3, but really this is so far a volatile sideways correction. I'll start watching more for the pullback correction if we do start closing on the neckline, especially the defining point on the neckline. So that defining point on terms of yield is 4.263. We start closing, roll over and close below that. I'll start watching for at least that bigger pause, potential pullback into the rising weekly rotation zone. Now we have closed above that 62.5. Would this pullback invalidate that rule? No, it would not. It would just, I'd be watching for pullbacks. This would not be a short the yield thing for me. I'd be watching for pullbacks because no major technical damage would have been done. We still could see yields climb to 4.6 over the next few weeks. But remember, this is on a weekly basis. So do pay attention to this. That's what now this might never trigger. We could just continue to climb up. But I'm paying very close attention to that. Dollar index. Look at this with the volatility, the big Wednesday election results, Thursday big reversal. But then Friday, you got some selling pressure, and now it's breaking out. Almost that 87.5 rule. Right there. So, gonna have, and this is coming into some major overhead resistance. So would not be surprised to see more of a pause up here in the dollar, which could lead to a little retreat in those yields on the notes in the short term. Again, the dollar has to get, it's butting its head up against a very key defining trend line. This is actually a best fit line technically. So this best fit line, it's been in place for a number of times and retested in April, May, June, and now we're retesting it in November. Will be interesting to see what happens if it does break through here. Because the key of this whole sell-off from the highs in September of 22 to the lows in July of 23, the 50% harmonic where it topped out in October 23 before triggering the massive rally we're still in, we're climbing back to that area potentially. And this rally is not stopping yet. So, in terms of crude, we're coming back into key support area. Things are starting to price in the slowdown again. It's more the market's not, but things like crude are. Gold, wanted to point this out. Little bounce, first cross rotation zone. Yeah, it's a little sloppy in the head and shoulders because the shoulders are not more symmetrical, but this looks like it's going to trigger. A very minor target area is about this 2614, but if this plays out over the next few weeks, I'd really watch this first target to the bottom of the rotation zone. We have not hit the bottom of the rotation zone since we started this key bull move last February. So I'd be paying attention to, this 2575 area possibly over the next few weeks. That we could see some continually retreat in gold. Now, does that do major technical damage? No. It's at least getting it out of severely overbought, and we're not even close to oversold yet. And we have cycles still heading down. I got you, Royal Palms. Let me get through a couple of things. Silver. This is a really ugly. I'm just more looking at this and the first target area made back to this 2886 area as a possible thing if this does trigger. It's lost the rotation zone on the daily. On the weekly, we're right at that bottom, but look where that 28, sorry, what did I say before? It should be 2886 area, right around that 50. Last time we found very key support at the 50 back in August on the weekly. Pay attention to that, especially if you close below this weekly rotation zone this week. Copper. Look at the volatility here, but now we're looking to roll back over. We tried to regain again futures edge, which I recorded last Wednesday, which that should be coming out today or tomorrow. So watch for that to drop. But again, really pay attention because copper could be again pricing in more of a slowdown. Also, the yen trying to still climb upwards, losing momentum. What happened to my other? Hold on. What happened to all my cycles? Oh well. Did I delete them? I mean, they're on here. I don't know what happened to that. Oh well. We'll just go here. Let's go back to the yen. The yen cycle tops coming in, but still holding above key support. Still, we have the magnet price. Now remember, this is the JGB, sorry. The yen, we're still above that 62.5. First magnet price is still 156.35, but this is getting into this territory up here is where they started intervening before. We're not there yet, but you got to pay attention to possible intervention. Euro, big, again, the double. We had the potential double setup, never triggered or confirmed last week, and then we broke through. This was a great pausing bar, which gives us 106.50, which we're sitting right there, and the next key area lower is 106.20. Those are the next, and coming into very key support for the euro. Bitcoin continues to march higher, taking out we had the 80,000 cluster. The next clusters were 80,150, which we're trading at right now. And if we continue through that, it's 88,429. Good morning. Well, Tesla's not trading today. It closed above the 62.5 on Friday. I mean, we have stuff the after hours and pre-market trading, but it's not going to trade during the thing. The next magnet price is 375.41 in Tesla. Let me do EXPE. So, Expedia. Which took off again. Technically, your magnet price is still the 200 area again on any pullback. Now, in the short term, I'd be watching for a pullback and at least a reconnection with the rotation zone on the daily. But unless this does not close back below about 162, I'd be looking for at least a secondary reaction back up, because this is a minor topping pattern, but not a major topping pattern yet. And we still have the probabilities. We've checked off that 75 in the single bar with the 62.5, but you still have the magnet price of that 200. So it's going to be interesting with Tesla too, because we don't know Elon's official role in the administration, but he could be, if it's significant, again, he could dump tax-free his Tesla. So it could get very interesting for Tesla holders, but in the short term, the trend is definitely up. Hey, Richard. So that's just what I wanted to cover today. Real quick. You got stuff, keep an eye, like the key things I would be keeping an eye on the dollar this week, especially with all this Fed speak, against very significant resistance, because if this pops through this trend line, it can make a quick trip to that 107 area again. The market's still in amazingly joyous mood, on waning momentum and incredibly overbought, and we could be setting up again DeMark sell signals and end of wave signals, but nothing is triggered. So until they trigger, The trend is still up. I think that's it. Thank you, everyone, for tuning in on Veterans Day market holiday. Futures open but closing early. So just keep that in mind if you're trading. And I'll be back. I'll be back tomorrow for probably what is the quietest day of the week because we just got Fed speak and no major numbers. For the people who tuned in a little later, the major things are Wednesday with CPI, Thursday with unemployment and PPI, and then Friday with retail sales. And every day this week, besides today, we have Fed speak. All right. I'll see everyone. Please, please, please tune back in tomorrow. This is going to be a super fun week. So let's kick it off in style. We did some more macro. If you came in late and want to look at the ratios I covered, just rewatch the beginning. With that, I'll talk to everyone later. Bye for now.